It's Friday, the 12th of November 2021. Welcome to the Fear and Greed Business Headlines, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
All right, 5 stories in 5 minutes. Number 1, what a day to be a miner. Big share price rises for all sorts of different reasons. Fortescue Metals was up 8.2%. The battery metals companies did well. The iron ore companies did well. It was a big day.
Sure was, and undoubtedly, as you mentioned, the standout was Fortescue Metals. That was in part because Chief Executive Elizabeth Gaines said Fortescue Future Industries, that's the company's green initiative, had a pot of unspent money for renewable projects. Now, Fortescue plans to spend about $800 million in clean energy projects over the next year. Some investors had been concerned that the slump in iron ore prices might mean Fortescue wouldn't put that money into its green initiatives, but the fact that there's money set aside pleased investors. It really demonstrates just how hot anything related to climate change initiatives is at the moment. We've seen that already this week. Chalice Mining's up 45% in the last 3 days after it announced it had made the biggest nickel discovery in Australian history. That's because nickel is critical in electric vehicles and lithium batteries. Other battery metals companies just keep roaring ahead. Lithium producer Pilbara Minerals is up 400% over the past year, including a couple of percent yesterday. Orocobre, Lynas Rare Earths, Iluka, they've all had incredible runs.
Yeah, big day. Big day. On to story number 2, Sean, and I'm going to need a bit of help with this one because unemployment figures are notoriously difficult and a little bit deceptive at times. But yesterday, the unemployment rate jumped to 5.2% for last month, really surprising economists.
Yeah, it was a bit of a messy number. It was 4.6% in September, then 5.2% last month, as you mentioned. Economists expected about 50,000 new jobs last month because of reopenings in New South Wales. Actually, there was a 46,000 drop in positions. Mostly it was because of the way the Bureau of Statistics did the survey. They did it earlier than normal, so it didn't capture all the reopening in New South Wales. And also because more people looked for work. The participation rate is how the economists call it. That rose. Overall, the employment market is in okay shape though. The number of jobs is still lower than pre-Delta levels and the unemployment rate is now a fair bit higher than pre-COVID, but job vacancies are high, economies are reopening, job losses this year are way below last year. We might get some choppy numbers going forward, but the labour market is going in the right direction.
Now, story number 3, if you're an investor, yesterday, there was so much information around plenty of companies holding AGMs, companies making announcements, a lot of them talking about how COVID has impacted business and plans for the future.
It was a really interesting day. You're right. Flight Centre Travel came out. It said that it had received $248 million in wage subsidies under the federal government's JobKeeper program over the previous 2 financial years. $248 million, massive amount. Then you think about how much they lost. $1 billion during those 2 years. Retailer Sephora, which is owned by French luxury giant LVMH, came out and said it had plans to roll out more stores in Australia, but it won't do so now because of the pandemic. Ramsay Health Care, it updated the market. It said elective surgery restrictions and disruptions caused by isolation orders and lockdowns across the country really hit earnings hard in the 3 months to the end of September. And Breville, the sandwich maker and coffee machine group, said it was facing supply constraints and delays at ports, which was hindering its ability to meet customer demand. Incredible how COVID somehow has seeped into all parts of the economy.
Story number 4 this morning, Sean, and it's really more of a question for you because the other sector that got a real kick along yesterday was the gold stocks. Why do people love gold so much?
Well, it depends what else is happening. On Wednesday night, there was much higher than expected inflation figures out of the US. Now, consumer prices in the world's biggest economy were 6.2% higher than a year earlier. Gold is a store of value. When people think prices are going to rise, they like gold because gold rises along with it. So if you're an investor and you think inflation's rising, then you jump in and you buy gold. The price of gold rises, so too does the share price of the gold company. As you mentioned, some of the gold companies in Australia did really well yesterday. Regis Resources was up more than 7%. Evolution Mining was up nearly 5%. Northern Star was up 4.5%. And market leader Newcrest Mining finished more than 2% higher. It was a very good day to be a gold miner.
Certainly was. All right, story number 5. It wouldn't be Fear and Greed without a quick Elon Musk update. Take it away, Sean.
Well, Elon has sold about $5 billion worth of Tesla shares in part to pay a tax bill. He still has about $195 billion, so don't be too worried about him. Now, the sell down is presumably part of his response to his Twitter poll over the weekend, where he asked whether he should sell 10% of his holdings. His followers said, yes, it's actually the first time Mr. Musk has sold any Tesla shares in about 5 years.
That's it. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Friday, the 12th of November, 2021. 2 things to do. Hit follow on the podcast and head to fearandgreed.com.au and sign up for our free daily newsletter. I'm Michael Thompson, and that was the Fear and Greed Business Headlines. Have a great day.